Hello, friends. Welcome to our channel, Business Startup Journey, from idea to reality. Today, we will delve into a crucial aspect that impacts the viability of any startup, the financial aspect. In the video, Financial Aspect of a Startup, Creating a Financial Plan, Budget Allocation, Expense and Revenue Review, we will thoroughly explore how to properly prepare a financial plan for your startup, efficiently allocate a budget, and analyze expenses and revenues. Let's get started. Section 1. Creating a financial plan. 1. Defining your product or service. First and foremost, precisely define what you are selling or the service you are providing. Elaborate on the key features and advantages of your product, as well as your target audience. 2. Setting objectives and goals. Determine the specific financial objectives you aim to achieve, whether it's revenue, sales volume, market share, etc. Set realistic and measurable benchmarks. 3. Cost and pricing evaluation. Determine the cost of producing your product or providing your service, accounting for materials, labor, equipment, etc. Subsequently, establish a price that covers expenses and generates profit. 4. Sales volume forecast. Estimate the anticipated sales volume for the initial months or years. Consider seasonality, market trends, and other factors that might impact sales. 5. Expense calculation. Thoroughly calculate all potential expenses associated with the startup, from employee salaries to marketing costs, rent, logistics, and more. Section 2. Budget allocation. 1. Prioritizing elements. Identify which aspects of the startup hold the highest importance at this stage. For instance, if you're focusing on product development, the budget allocation for research and development might be substantial. 2. Budget allocation. Allocate the overall budget across different components of the startup, such as marketing, production, development, administration, and more. Determine the percentage of the total budget for each direction. 3. Expense monitoring. Establish an expense monitoring system to track where funds are being spent and on what exactly. This helps prevent budget overruns and facilitates timely corrective actions. Section 3. Expense and Revenue Review. 1. Expense analysis. Conduct a comprehensive analysis of expenses, distinguishing between essential and potentially optimized costs. Prioritize resources and pinpoint areas for potential savings. 2. Revenue forecast. Develop a revenue forecast for a specific period based on sales volume and pricing of your goods or services. Consider current market conditions and demand. 3. Regular analysis. Consistently analyze both expenses and revenues, comparing actual figures to forecasts. This proactive approach helps identify discrepancies and allows for strategy adjustments. Section 4. Financial forecast and scenarios. 1. Revenue and expense forecast. Study market trends and historical data to create a more accurate financial forecast for the upcoming months or years. Develop multiple scenarios to account for different potential developments. 2. Sensitivity analysis. Conduct a sensitivity analysis to assess how changes in various parameters, such as raw material prices, exchange rates, sales volumes, will impact the financial outcomes of the startup. Section 5. Fundraising. 1. Internal financing. Consider using your own resources or funds from co-founders to finance the startup. Determine the amount of money you're willing to invest in the project. 2. External financing. Explore options for raising external funding, such as investors, partners, or venture capitalists. Prepare an effective pitch for potential investors. Section 6. Financial strategy and management. 1. Profit reinvestment. Explore the possibility of reinvesting a portion of the profit into the company's development. This can contribute to faster growth and enhancement of the product or service. 2. Risk mitigation. Develop a strategy to minimize financial risks, considering factors like currency fluctuations, changes in market demand, and other relevant variables. Section 7. Audit and optimization. 1. Regular financial audit. Conduct regular financial audits to ensure that actual figures align with your forecasts. Identify any deviations and seek solutions. 2. Expense optimization. Continuously seek opportunities to optimize expenses. Determine areas where cost savings can be achieved without compromising the quality of the product or service. Conclusion. The financial aspect of a startup is a crucial factor in its success. By conducting detailed analysis, developing strategies, and executing plans, you can ensure steady growth of your business and maintain high-quality financial control. Remember to adapt your approach to market changes and always remain proactive in managing your startup's finances. If you want to learn more about marketing, please proceed to our previous video. Don't forget to subscribe to our channel to receive more valuable tips and information from Business Startup Journey, from idea to reality. See you in the next videos.